Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the Emini futures contract and put together a trading plan for the week ahead, looking at some high probability action areas and price targets that we can play for the remainder of the week. So S&P 500 was up 0.7% for the final week of October and printed new all-time highs. October finished up on the month 2.3% over September and 16.3% for the year, whilst maintaining a 41% close above those 2025 lows seen post-Liberation Day. In terms of sector performance, information technology and industrials also put in new all-time highs, whilst consumer staples, real estate and materials were the losers for the week, dropping all three of those back into corrective territory. In terms of the market structures, in terms of the dynamics really underpinning the market at the moment and the data for the week ahead, well, the story is relatively simple. Obviously, we had Trump announce the completion of some type of deal with Xi last week, which both sides attested to the positivity of the meeting. And so that carried sentiment in the early part of the week, more a by the rumor, sell the news type issue, which was to some extent exacerbated by the fact of Powell's pushback in terms of rates. The market was pricing in pretty much a shoe-in for a rate cut in December. He was keen to express that certainly is not set in stone, and so we saw a bit of a wobble in the markets post that FOMC meeting, leading into trading lower on Thursday again after we got that confirmation from the Trump-Xi meeting. It didn't really give the bang to the upside that many would have anticipated, with that weight from market concern regarding the future path of rates in the US. In terms of data heading into this week, what do we have? Well, we get ISM manufacturing PMIs this afternoon. Palantir announced after the close. AMD announced after the close tomorrow. Won't get any jobs data tomorrow because we are still in shutdown scenario with the US. We will get ADP and ISM services PMIs on Wednesday. Jobless claims Thursday. We won't get at this stage, unless the government is reopened, non-farm payrolls on Friday as we normally would. And so the only data of note on Friday will be the University of Michigan consumer sentiment. So really the market in terms of catalyst is likely to lean on Palantir and AMD. There is also McDonald's giving a sense of a read on consumer strength on Wednesday. In terms of market structure, we're one time framing higher now on the monthly time frame. Let's just see where we are. This is the post I shared this morning. So yeah, one time framing higher will complete at 65.91. So we're trading 68.99 as we head into the session today. So some decent support structurally well below the market, and that's pretty bullish. One interesting factor to pay attention to is this idea of the monthly candles and the higher highs and the higher lows that we have been witnessing. Our current run is 6 months in higher highs, higher lows, and factoring that into historical relatable time periods. So we had 9 higher highs, higher lows on the monthly time frame, 2018, 7 in 2014. 2013, we had 6. 2007, we had 6. 2004, we had 6. And 1999, we also had 6. The outlier being 1995, when we had 12 straight months of higher highs and higher lows. So since 1990, of one time framing up on the monthly, of those runs of 6 months or more, the majority of the runs do actually end at that 6-month period. So previous weeks ahead, if we think about the June SPX put in its low for the month, the first trading day of the month, and since then, each month post June, we've had that same dynamic occur, but that actually ended in October, while the monthly candle remained bullish in terms of the bar count. it actually failed to put in that early month low and then trade meaningfully higher. The weekly continues one time framing up, and that would stop on a close below 67.11. Last week had a solid upper shadow and a close slightly below the open and almost in the lower quartile of the range. This again could suggest that we are seeing some weakness creep into the market, but we haven't got confirmation of that as of yet. For the daily time frame, we flip to one time framing down, which will be neutralized on the close day above 69.02. We trade 6,900 in the pre-market here, and so those are some key levels to keep in mind in terms of the overall market structure. Looking under the hood and thinking about market breadth decreased for the week last week as megacap tech really just continues to support the market. Eventually, one would think we are going to have to see some broadening of the market and support from other participants. But as long as stocks over the 200-day moving average sit above the 50% level, so last week we were at 58%, whereas currently at 54%. So it's difficult to get too bearish while the majority of the S&P sit above their 200-day moving average. And we're a long way from being oversold even on the 20 and 50 days as well. So it really, whilst not a strong buy the dip mentality underpinned in terms of the market breadth, it is still constructive, and that needs to be factored in terms of positioning and trading. So let's talk about the charts now and see where the technical opportunities may develop for the week ahead. In terms of our weekly volume weighted average price and momentum on the weekly time frame as measured by a 5-period look back, we have support coming in at 67.11 there, and like I say, we're currently trading up at 68.99, so decent structural support on the weekly. In terms of the daily volume weighted average price, it was as of the open this last night, 68.73 being bearish, but we tested and have seen buyers at the VWAP this morning. Note buyback windows are open again on the corporate side of things, and they are the predominant buyer of the VWAP test. So we'll see how that dynamic starts to feed into things, and we are obviously coming into a seasonally strong period for markets, so that also should be factored into things here. But like I say, the setup on both the weekly and the daily timeframes at this point, heading into the New York Open today, remains constructive. So let's move to the intraday charts and look at what we can think about in terms of plan trade levels, swing trading levels. These are really specifically. As we head into the week, I'm using a bull bear zone of the 68.20, 68.10 area, just at that gap that we left last week on the Monday open where we gapped higher. So any move into that zone, I'm watching for bullish reversal patterns there to engage on the long side. First test will be a move back into the close on Friday, 68.74. We get through there, and then we're looking for today's daily range resistance. We're looking for Friday's highs, first of all, 69.18. Daily projected range resistance, 69.30. So expect some consolidation there. But then ultimately my objective would be, whilst we hold the weekly bull bear zone as support, I'm looking for a test of weekly projected range resistance, which comes in this week at the 69.80s as shared this morning. 69.81 is our target on the upside this week versus market makers' implied volatility and potential hedging activity into that zone. If we take out the bull bear zone and get a close on intraday or daily timeframes below there, our target to the downside will become weekly projected range support, which is 67.67. We have this high volume node also on the profile here. We have the volume point of control as well. So any move into that area, we watch for bullish reversal patterns. First target will be a test of the bull bear zone from below. If we get acceptance above there, then the same upside targets apply. If we get rejected at the bull bear zone, then we will be looking for an extension to the downside. Now, what I'm looking at, if that scenario played out, will be an equality objective. So versus our current swing structure that we have in play here, we can look at 67.50s to 67.13 on the downside would be targets to play for if we do start to roll over. But like I say, at this stage, whilst we hold that weekly bull bear zone, my focus is on looking at long opportunities. I did share with my trading group this morning the idea of long positions for the London session, which have played out quite nicely so far, and we're targeting a test now of that 69.18 on an intraday basis. So the updates will continue via the blog on a daily update with specific trade levels and targets, and there is a trading chat that I'm running in real time, giving more detailed updates on a daily on an intraday basis. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.